The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, largely during Thursday's trading session, it felt like traders were kind of getting the house in order, so to speak, in the grains ahead of USDA's data dump on Friday. We got a lot of reports in front of us, and overall markets, quarter beans, kind of either side of unchanged when it was all said and done. A little more pressure in the wheat trade. We're going to talk about it, though, get some perspective, and set things up ahead of the USDA reports. Joining us now, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to talk with you again. And as I mentioned, largely felt like a quiet positioning consolidation type trading day on Thursday ahead of the USDA reports, at least in the grains anyway, Brian.
That's true. You had about a 5 to 7 cent trading range in the corn futures contracts, and that's a pretty slow day, especially in front of a report. So as we kind of look ahead, the big picture, and try and anticipate what's due out tomorrow, you're going to find that there's just not a lot of expectation for big changes. So the market needs to focus, or will focus, its attention elsewhere. So is it South American weather? Is it politics? What's out there? The bottom line is just that, we've talked about this before. In the corn, at least, it looks like farmers just had better crops than expected, probably for about 60 to 70% of producers. Didn't have enough sold. They've got inventory. The end user knows it. It's kind of the bottom line, is that the end user's not chasing the market right now. You've got higher interest rates. They don't want to store it. So unfortunately, they're asking the farmer to store corn for them right now.
Well, in terms of this corn market, you were mentioning to me some notes you saw about China's corn crop maybe getting a little bit bigger. That would just add to that world carryout. A lot of talk about that corn carryout, the world being very, very large, obviously. You look at the U.S. futures here. So far, we've been holding lows. And I mentioned this to you. I'm hopeful that with USDA's reports, we don't get something overly bearish, that we could at least hold the line, so to speak, in this corn market here, Brian.
Right. And some would argue we are. So let's go this route. If you take where September futures went off the board, September went off the board in that 462 range, and that consequently left the market with some area of let's say pivot, or where the market's going to pivot. Well, December goes off at 466. Here, March is at 457 and 3/4. Let's just call it 460. So it seems to be finding the support near that 450 area or higher. December corn futures did trade under 450 for a small period of time, down around 447. But let's just call it that 450 zone. So it's just kind of scraping along at the bottom. Farmers aren't aggressively selling corn hand over fist at these prices, but they're looking for small advantages. And I'm talking to enough producers who just, logistically, producers are getting bigger. They need to move stuff along the year. They just can't sit on what they've got stored forever, and they need to core bins and all of those things that come along with the let's call it the science of storing grain, and when to move it, when to core it, keep it dry. It's a tough window, but we're consolidating on the cash market and the futures market. One of the fears we talked about before, fears I had, was that the front months keep drifting down to where the last front month went to. Mm-hmm. So that's where we're at. But yeah, the International Grains Council didn't throw us any kind of a positive bone. Updated global corn crop forecast by 7 million metric tons. China's crop, most of it comes from expectations for a larger China crop in the year ahead.
Well, I saw a headline on social media that China's out there as well, looking to refill their reserves. Now, we haven't seen China in here with a flash sale for U.S. commodities in a while. We did get a flash sale Thursday morning, corn to Mexico, a good traditional buyer stepping back into the market. But to that point, China's been pretty absent, and really a lot of folks have been absent from buying U.S. grains here as of late. So that demand picture is looking kind of rough heading into a key report as well, Brian.
It is. And keep in mind the numbers I gave to you are mentioned on China's 23-24, so that we're in the 23-24 marketing year. Yeah. So basically what we're looking to head to grow. It's not in the bin yet. The safrinha crop's not in the bin, but you can't put a lot of pencil to declining the safrinha crop out of South America as well. So it's just kind of unfortunate that when we look at all of the sort of variables that might impact the price of corn. Earlier in the year, there's a lot of talk about crude oil prices. I remember Goldman Sachs talked about $90, $100 crude oil prices. Well, that would have provided support for corn most likely, and here we're down around 70, 72. So you just don't have that big number out there in the crude oil, and then yields were better than expected, and on and on and on. These things have a tendency to kind of ebb and flow. I don't know if the world's ever quite been in a position, though, where you see the potential for excess inventories in multi-continent areas, where it could be South America, it could be the U.S. It's a bigger global gluts, situation that may be at hand. But I still will contend demand is out there, Jesse. It's in a different form. It's in a buy as you need form, rather than buy ahead and make sure you have it. If China is buying U.S. corn, there's probably smart to stockpile some inventory in case they have less than ideal weather.
Well, let's flip the conversation to soybeans, and I think we could tie this in as well here. Soybeans wise, there's a much tighter balance sheet on the U.S. here heading into this report. There is some chatter of maybe some problems with this Brazil crop with the heat and dryness we saw. I know Conab lowered their numbers. I'm not expecting USDA to make as sharp of a cut as Conab did, though. But your thoughts on soybeans? It feels like a bit of a tighter picture and a slightly different story than corn heading into these reports, Brian.
I think that the story could be maybe more than slightly different, because unlike corn, you come into this year with 2.1 billion bushels of carryout. That's a very adequate cushion. Soybeans around 250, 245 million. That's not an adequate cushion if you have any disruption along the way. And Brazil has had some disruption. Now, they also increased acres. So if you take what their disruption is, you could argue between Argentina and Brazil, you're still looking at a net right now, maybe of a couple million metric tons more out of the southern hemisphere because of the rebound in Argentina, despite what could be a Brazilian crop. The wild card is what this Brazilian crop is. The USDA will likely lower in line with CONAP, but we kind of know the USDA doesn't really like to make big swiping cuts. And so we're not expecting any significant numbers that are going to shock the market. Oh, it's always a potential, but we're not expecting that. But it's some of these fringe numbers we start to hear people whisper about in the under 150 and maybe under 140 million metric tons. If that has any bearing, then the bean market had set itself up for a bull run. But there's no confirmation of that yet. And that's weeks away or months away. What you're hearing is some early harvest results that have been disappointing. And I think some traders are trying to extrapolate that to more of a general crop. I'm not necessarily convinced that's the case.
Well, Brian, obviously we don't have a whole lot of time ahead of these USDA reports now, but for folks who are looking at things, any thoughts, risk management? I know this too. You and I have talked about this. You told me this many times. One day doesn't make a trend. So we gotta think about our risk management here, but also look at the bigger picture. What would you tell folks heading into a very pivotal report day that can be pretty volatile initially when we get those numbers?
I would just remind people. I know this is very elementary, but I'm looking at the March soybean contract. So let's start with that. Good consolidation the last 4 days, looking like the market's trying to hold, let's say, this 1235 area, right? But this particular contract has seen much lower levels, down to a low last May of 1145. And so all of a sudden 1235 looks a lot better than 1150 or some level like that. There's no sign this downtrend is over. If the market feels confident that the Brazilian and Argentine crops are there, again, the problem is end users are only buy only what they need and where they can get the deal. And so my bias would be go into this report. If you want to be friendly, that's fine, but why not be friendly with an insurance contract? Maybe buy a very short-term put option, and or buy a very short-term short-dated option, which is based off of November for new crop, to get you through the reports. You're not spending an arm and a leg, but you're doing something to ward off what nobody would want to see, and that would be some sort of a bearish surprise and bearish reaction, or sometimes you get a neutral report and a bearish reaction. The worst is you get a bullish report and a bearish reaction. And so those are all things that in a downtrend like this, they worry me. So that's what I look at in beans. And in corn, I think we're probably trying to go into that sideways pattern. There is not quite as concerned right now, but from a bigger picture perspective, I would do the same thing. Look at some kind of put buying, some kind of option fence, something to defend this. This idea that it's gone low enough, that's not good risk management. It could backfire. I know I'm asking people to spend money after the markets have been down, but it might be money well spent for peace of mind and for actual price protection.
We're having a conversation today with Brian Doherty from Total Farm Marketing. Brian, a couple notes that you have in the wheat markets as well. I know a little more pressure there on the day Thursday. Obviously, going to get a lot of wheat numbers as well. I think we got canola, small grain seedings numbers too coming out Friday. I saw this headline, though. It was kind of interesting. U.S. wheat imports have reached a 6-year high. That's kind of atypical as well. I don't know if you saw that headline too, but just some interesting caveats here on this wheat trade heading into the report day as well.
Yeah, interesting that the imports are up. Though keep in mind they're a very small percentage of the overall supply of wheat, and most of that probably comes in from Canada, and often is more a reflection of whether Canada has a better crop or extra bushels more toward the border, or it needs to make its way into the country. But yeah, here's the bigger problem you're going to see with the wheat is that it's been dismissive of concerns of the war. It keeps looking at Russia as just this pot of wheat that doesn't seem to end. Ukraine, the Grains Council edged their crop a little bit higher, edged Russia's crop a little bit higher for wheat, and consequently, those are things that are problematic to sustain a rally. Wheat prices are still holding a good solid 50 plus cents in Chicago above their recent low. They flared out here. But I think they had a miss. And what I mean by that is they had a really nice, beautiful pennant formation. It's a chart formation and an upswing. You got what they call a flagpole. The market started to show breakout to the top side here about 2.5 weeks ago, and then it failed. So it's like the other markets here. We just don't have that follow through buying. I think it would take a shocker on the report tomorrow somewhere to all of a sudden turn wheat into a bull. So if in doubt there, I'm selling a little bit more cash. I always tell my customers, if you know how to do it, you're only a phone call away from owning something. You don't have to own it in a bin, and or consider forward contracting some new crop.
Yeah, good thoughts in the wheats. Over in livestock, decent day Thursday in cattle and hogs. Had another update there too. I know we'll get some various numbers for the protein sector with the USDA reports out on Friday as well. And then some of the grain numbers could have an impact too in the market direction. Any notes over in cattle and hogs here as we head into report day, Brian?
Well, as you said, we're getting to that time of year where just a lot of data dump and a lot of numbers. But the bottom line is you've got a winter storm system pushing through much of the Midwest. That likely provides some underlying support for cattle, although the market really hasn't had much of a response. It was up today, but if you look at where cattle prices have been the last, let's say, several days, or on the deferred months, maybe last several weeks, they haven't moved much. Now, the good news is they haven't really gone down. So if I look at something like the April, Jess, we're 174.57 there. The market bottomed at 165. So we're still solid $9, but we're up against the upper Bollinger Band, the 50-day moving average, some of those things there. So again, I think put options are a viable alternative to floor the market. Try and leave that top side open. We're getting into that winter weather now that starts to have some impact, and maybe some shift in weather patterns, and weight gain will be perhaps a little bit less than it's been here as of late, and consequently that should provide underlying support. The key is the cash market. So what's with cash? Is the consumer buying or not? Well, inflation ticked up a little bit today. We saw that, and that leaves the idea of higher interest rates. We don't like that from the consumer who's spending money on credit card debt and interest rates. On the other hand, it tells us the economy still seems to be kind of chugging along, maybe better than most had thought. Unemployment remains low. So just hard to draw a conclusion to be negative cattle when they're trading a good solid $20, $25 off their recent highs.
Yeah, that's some interesting things to think about here. And cash, you're right. I have cash has been interesting to me here, and especially the winter storm moving through. I think that's going to have a pretty sizable impact here to round out the week and in next week too. Dairy, a lot of red over the dairy parlor. It looks like on Thursday. Any notes for us there, Brian?
Yeah, we had so today we started our fourth day up, a good surge. I think a lot of short covering because the market was down so hard. And then today is one of those typical days in a bear market, and indicative of a bear market, where you get a good start this morning, you start higher on the front months, and all of a sudden here we are 35 points lower. That's a lot. So just to put some numbers in perspective, 35 points in the dairy market, you can look at percentage changes, but I just want to put in dollar changes. Each point's $20. So 35 times 20 is $700. That'd be like a 14-cent move in soybeans. Just a real disappointing day is what that is. And that's discouraging. Now, that being said, we want to believe that while there's always downside risk, that prices have moved low enough in the front months, and the back months agree with us because they're still holding above 18, that we should see market clearing forces come into play. Where I am personally perplexed a little bit is why the cheese market was so soft into this holiday season, and why that seemed to be something that was on sale and nobody was really grasping for it. That's not typical. So that concerns me. I'm not so sure it's a supply issue. We've concerned ourselves that big production producers get bigger and they continue to provide supply, and they try and outproduce poor markets. But I can't believe that the demand hasn't cycled back better. So it makes me believe that there's a bunch of pent up demand, and that the retailers and the cheese, they'll bring prices down to a point where all of a sudden it just starts to pick up. So maybe it's a little bit more hopeful wishing here, but I think that's an undervalued market. I don't think we're seeing the dairy industry grow to the point where we're going to stay in a sustained downtrend.
Brian, good thoughts as always. Anything final for us before we wrap it up here today?
Like anything, we're into a new year, so keep your marketing pencil sharp. It's a little more challenging. It's no shortage of producers that have kind of, let's say, opened up to me and said, "Yeah, it's pretty easy the last year or two. I had high prices. There wasn't a lot of thought that necessarily had to go into it." Now, I'd take them back to when they were making decisions to sell. It's always some stress, but to their point, it was a higher value. Now is the time where we really have to kind of push a pencil to it, look at all the different strategies, and kind of put on that real sharp business hat and see what might work best for you, or what your risk tolerances look like, and if you need to change those, and if you need to change money flow, and just take a good look at all the alternatives that are available. There aren't any easy answers, especially in the grains right now, but there are still some answers.
Brian, if folks need some questions answered about their marketing plans and more, I know they can reach out to you there at Total Farm Marketing. How can they reach you, Brian?
I'd ask them to give me a call at 800-334-9779. That'd be the easiest way. Like to hear the question, hear it in your voice. Or if you have comment or constructive criticism, great. Otherwise, Brian with a Y at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. A lot of good resources there.
Brian, always appreciate the time. Thanks for joining us on Market Talk today, and we will talk to you again soon. And by the way, go Pack Go this weekend for the playoffs,
Yes,
right?
sir. Yeah, go Pack Go for the playoffs, right? So we're hoping for that. So let's
Yeah,
kick Dallas.
definitely. Brian Doherty with Total Farm Marketing joining us here today on Market Talk. We're out of time. Thanks for joining us. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.